Testing, testing. All right, let's get started. Hi, everyone. Thanks for watching today's pre-market talks. Today is March 13th, Monday. And as you guys all know, you can find my link trace on my TradingView profile and just click Discord. You can join my Discord channel to access more market opinions. And you can go to my Twitter and see market breakfast I post every day. Okay. And today we are going to talk about a spike, SPY, and a couple hot stock charts, right? Like SVB, Silicon Valley Banks. So that you can get a brief understanding of what's going on in this market, what's going on in past weekends, right? So if you are watching, you are very welcome to leave your questions and your thoughts in the comment section. And if you can also, click the link on my profile to join my Discord channel to access more daily market opinions and stock ideas. If you are watching the replay, add the hashtag replay to your comments so I won't miss your questions. All right. So the biggest news in this market for the past weeks was SVB, Silicon Valley Banks. And as you guys can see this morning for US stock futures, rose just a little bit, especially Nasdaq. Most because U.S. authorities secured depositors' funds and created a lending facility for banks to meet depositors' needs. So kind of save some banks, especially small and mid-cap banks. And for SVB, as you guys just simply could click Google search, you guys can see a lot of reasons why this bank collapsed in the last past 48 hours. So actually, I just want to give you guys a brief sense about what happened to this company. First of all, as I hope you guys all know, finance is not a free lunch. As the name suggests, Silicon Valley banks specialize in banking for tech startups, and it mainly serves some venture capital funds and have some startups in Silicon Valley. And one second. And first of all, I'm assuming you all know how banks making money. Normally, banks make money from the interest spread, so which is getting cheaper money from the Fed and loaning money with a higher interest rate to individuals. So they make money from the interest rate difference and the fees. So that's a majority way how banks making money. And actually, this bank, SVB, are the same. So generally, the cash flow of a bank comes from individuals, which is our deposit. However, SVB's cash flow comes from enterprises or entrepreneurs, which are funds raised by VCs in the capital market or money in the amount of startups. So in past 2 years, during the COVID pandemic, SVB generated a large number of deposits because in the past 2 years, economic confidence is not sufficient. So therefore, most of VC capitals and startups are unwilling to invest. And the US government also issue many subsidies. Therefore, many banks have collected a large amount of deposit like SVB, but since people are unwilling to invest, therefore the bank cannot loan out their money. But as I mentioned, if a bank cannot loan out their money, then unfortunately they cannot make money as well. So instead, SVB bought a large amount of US government bonds. 55% of its portfolio was US bonds, which is very stable strategy for most banks. This is okay. But for the past 2 years, we all know that the whole venture capital industry was bad. So news like the technology first laid off employees was everywhere, which led to VC fundraising falling to freezing point. So for startups in this kind of extremely bad environment, they will not stop burning money, but instead they will spend more money eventually. So they have to withdraw money from the banks. So the cash flow for the banks like SVB began to tighten up. So but the troubles never come along. Since last year the US government has been investigating FTX, I hope you guys heard about this one. FTX, they serve the largest global virtual currency trading platform. And SVB happens to be FTX clients, and FTX has a lot of money in Silicon Valley Bank. And Silicon Valley Bank has also bought a lot of FTX financial products. So as a result, everyone knows that FTX collapsed. Therefore, as a client, Silicon Valley Bank was also involved. Therefore, a lot of money on their accounts was freezed. So run on the bank happened. So more and more VCs and startups request to withdraw their money. So Silicon Valley Bank has to sell their US bonds from its portfolios. However, not all US government bonds can be traded on the market. There are two concepts in accounting standards. The first one is available for sale, which is AFS, and the second one is hold to maturity, which means they might sold at a kind of discount, like $70. If you hold to maturity, this bonds might be worth $100. That's the meaning about HTM. So in terms of liquidity, if AFS can be sold in the market, while HTM cannot be sold. So most of Silicon Valley Bank's US positions are HTM, so it can only sell its AFS at a loss. So it sold worth a total of $21 billion, but it expected to lose over $1.8 billion. Technically, if they can hold these bonds until maturity in 4 or 5 years, and they can avoid this $1.8 billion lose. However, they don't have enough money, and they don't have enough time to hold this long, so they have to sell at a loss. So in addition, they also issued another like $2.25 billion in new shares to shore up its balance sheet. Unfortunately, that triggered a pandemic, among key venture capital firms who reportedly advised the companies to withdraw their money from the bank. So, and the rating agency Moody's also downgraded SVB's rating. Therefore, in such short period of time, the market, generated such huge pandemic emotions. Therefore, you guys all know what happened to SIVB, right? SIVB, we launched their chart a little bit. Yes, that's how what happened to this company on last Thursday, right? Just one day, just a simple one day. This guy, a run on the bank start since fall apart. That's why SVB collapsed in 48 hours. And the biggest danger of cash flow mismatch is a butterfly effect. The whole financial system is like, stacking blocks. And if you take out a block out of the bottom, the whole thing just collapsed. The essence of financial crisis is not that money disappear, but that liquidity disappears. But as I mentioned at the very beginning, I think this thing will not become like Lehman Brothers in 2008, because this will not cause the financial system danger. So it's more like a single one thing. However, most people are already starting to fear about the run on the bank issues. So especially for small banks like Signature banks and some small banks as well. So most people prefer to put their money back to JP Morgan, some big banks like JP Morgan, instead of like SVB or Signature banks, sort of things like that. So talking about this, I also want to talk about the KBE, which is a so not two reasons. Even you trade for the price correction, there's something you might want to consider. Even you trade the price correction, you want to trade back to this 8 and 21 EMA areas. There's still a couple of things you need to consider. First is this is not whole system kind of issue, so I think it's okay that we traded a price correction, right? However, we still need to care about the market fears, because as what I've been saw this morning about the fear greed index, it's dropped to 25, which is extremely fear. So everybody kind of fear about the market gonna keep dropping. And if for no long side of the way, this is weekly basis support level, right? So breakaway volume, which means a lot of investors trying to get out from this trade. So especially for long term. So from the long term basis, this guy possibly moving this way, possibly trying to try to test $30 each level again. However, in short term, this might be not a kind of that kind of we don't have that high possibility. I mean, in my videos, I mentioned a lot of time about the possibility and the probability, right? So if this for this kind of trade, the risk and the reward ratio is very good because the possibility is not that good. So that might be the reason why this trade might be that kind of higher potential rewards. If you even you consider this one, you're getting around $40. You trade it back to this kind of AEMA $45. That's $5 in potential rewards. And consider the stop loss. You use Friday's low as stop loss, which is 39.65. That's only $1. So one versus five, which is very good trade. However, the probability and the possibility of this trade is not good. So that's what I'm thinking about this kind of KBE, which is bank ETF. But talking about some individual banks like JP Morgan, as I mentioned in SVB drama, most companies prefer to taking out their cash from small and middle cap banks and taking this money to big bank like JP Morgan. So their chart looks, absolutely the best compared to most banks. Even from the weekly basis, you guys can see it's still holding up this kind of $128 ish. However, I still think from the technical side of the analysis, I still don't know think this guy can use this as a pivot low and moving up. So most likely it will keep going down possibly in next couple weeks. So possibly drop to somewhere 124 and going up again. So in the long run, it's okay. However, for the short term and for the next couple months, maybe next couple weeks, the whole financial system is still, gonna make a couple problems. I mean, the interest rate, how the Fed's gonna deal with this, I don't know, but I don't think the Fed are gonna take even more hawkish actions go against the market. I mean, right now they already see some negative results like SVB, the first guy who's been taking out SVB and small banks. So that's the first problem. If they keep raising the interest rate, the more problems are gonna occur. Not just a single bank or small banks. I mean, the whole financial system will occur this kind of thing. So based on this kind of hypothesis and this concept, I'm expecting. So there might no landing for the market in overall concepts. I don't think there's gonna be a soft landing or hard landing. Possibly there's no landing because no landing is the best landing, right? So if the market going up, keep going up, there's no problem at all. The inflation, I don't feel that way. So the market can keep digest all inflation problems. However, if the market keep dropping, more problems and more issues will occur to this market. I mean, not just the short term. I mean, that's the long term. So instead of dropping down, I'm expecting the market can holding up this kind of weekly level, which is 3770-ish. That's a first target I'm looking at. So in short term for day trade, you guys still can trade a couple, short options for some banks like WFC, Wells Fargo. Wells Fargo is one of the banks I'm trying to, take some short positions. However, I couldn't get in. Unfortunately, I couldn't get in. I still feel the risk are too much for a bank like WFC. I know there's some issue happened this weekend. Even WFC, Wells Fargo also made some issues. However, This way, I still feel they will go couple price correction, possibly correct back to $43, not like 45, maybe $43. That might happen as well. So it's hard to give a properly stop loss for this trade. And right now, even break a little bit, kind of support, but still holding up. So that's a something I need to consider. So possibly they correct back a little bit, I will take some short position and trade this guy back to this 37 or even $36 ish. So that might be a swing strategy for Wells Fargo banks. And other than that, for the spikes, let's talk about spikes. Spikes, as what we draw before, this is more like a trend line on weekly chart. Trend line support and trend line resistance. So far, this guy already break the trend line support, which means the spikes possibly will go negative for next couple weeks. Possibly will retest this 350-ish, and but they will retest this one first. So I'm still expecting this guy will, spikes will holding up this 370-ish level. That's something I'm still expecting to do. So other than that, if this guy cannot hold this level, then that's totally negative because on that kind of thing, we will meet the double head buttons patterns on weekly chart, which is gonna be very, very negative. You know, I can draw out this one so you guys can see, one M, another M. So which gonna be very, very ugly to see on weekly chart. So however, for today, let's see. From daily chart, we still see a red momentum candlestick doji on daily chart as well. And now we are extended from 8 and 21 EMA, and this area doesn't exist anymore. There's 200 EMA areas. Then after today, after last Friday, this kind of 200 EMA will become a majority resistance and will cause some pressure, selling pressure for the overall spikes. So that might be a problem for the spikes market. And after that, but I'm still expecting some correction happen in today or in tomorrow. But I mean, this week they have some key economic factors as well. Like they will post. Let me show you something. Let's say today's market for this week, we're gonna still encounter like core inflation rate, which is tomorrow, and the inflation rate tomorrow as well. And we will see PPI monthly over month on Wednesday and retail sales on Wednesday as well. So that's a couple of things we might pay attention to this week. And and for today, I don't think we can expect this guy go up too much. Kind of taking all loss back from one day, especially there's no economic indicators and no positive news about this market. Possibly, some operation might take some banks, might secure some bank deposits, might be a good news, but not that kind of good. So it's likely going sideways in this kind of range. So pulling the 8 and 21 EMA down to this kind of area. So that might be the most possibility for this market in just 1 day or 2 days. And talking about the 50-minute chart, I still cannot trust this kind of level as my support to long side of the trade. You see, if you want to trade the long side of the way, I cannot trust this level. It's not trustable because from this side, what I can see is this is a momentum sell, right? Even without correction, but still there's nobody coming in this kind of area to support the market. Possibly the spikes open up higher, like the futures open up higher a little bit. However, I don't think this guy will, directly from here to here. It's kind of unlikely. So what will happen in my mind if open up low? I mean, lower than lower than the price close on Friday, possibly will have some upper side of a momentum in 15 minutes, and then trade back a little bit. That might be happen for these spikes. And other than that, yeah, CPI will be out tomorrow. And other than that, if the market open high, it's unlikely. Most people possibly will still cut some kind of pandemic sales today. So that's my key opinion about this market. Let's see you guys have any questions or individual stocks want to go through. No, okay. So looks like we don't have a lot of watchers today. And what do you see, FTX? FTX. FedEx. Just be cautious, okay? This guy already breaks this kind of support level. The support level before was around this kind of, for short term. Let me see. Transfer this to daily chart so you can see this better. FTX kind of same story, and this one looks even more, even more negative compared to the spikes because this guy is already up too high, and this one is being tested for support level 197 ish, and from this kind of doji, you cannot say this is a hold for 197, so it's likely to break down and test this $183 ish level if you're trying to swing. And if you try to swing and try to trade a reversal, possibly you can get in after a bounce back and use this one as your stop loss and trade for the long side of a short position. And this $200 to 200 EMA might be a support for this stock. Any other questions? Earnings, so far, I mean, it still depends on the price. If FTX drop to this kind of level, I will definitely trade the earnings. If this guy are still this kind of way, you want me to trade the long side of the earnings, I don't want to do that. So earnings more like a trigger to pull the market down. So I don't want to try that on Thursday. Possibly we're still waiting for the overall market. That's my main opinion about this thing. So looks like we don't have more questions coming out. And that's it for today. Again, thanks for everyone joining my live streams. And you can click the link on my profile to join my Discord channel to access more stock ideas and watch replays. And hope to see you guys next time. And hope you all have a good trading day. Bye bye.